Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings. Today we're diving into Tenet Healthcare's proxy statement. It's a document that might seem dull, but trust me, it holds secrets. We'll uncover what this filing tells us about who's in charge, how they're getting paid, and even a bit about their plans for the future of healthcare, so let's get started. Tenet Healthcare, if you don't know, is a big player in the hospital and ambulatory care businesses. This filing is basically their invitation to their annual shareholder meeting, and it tells you what's on the agenda for the vote. First, the basics. The annual meeting is in May, and if you held Tenet stock back in late March, you get to vote. Now, what are we voting on? The main event is electing the 13 people who will sit on Tenet's board of directors, basically. The people who are supposed to make sure management is doing what's in the shareholders' best interest. We're also getting an advisory vote on executive compensation. It's not binding, but the board will have to pretend to care about what we think. Finally, we get to rubber stamp the selection of the accounting firm Deloitte and Defectsci. To get a good overview, let's go to the table of contents, which really tells us what we'll be focusing on today. We'll cover the director elections, their compensation, and look at the financial parts. Let's quickly run through the director nominees. There are 13 in total, 12 of whom are considered independent directors. Having independent directors is a big deal because it's their job to provide unbiased oversight. We've got the former president and CEO of Owens and Minor, James Bierman, and we also have some government experience, Roy Blunt, who was a US senator. The board talks about how these people have different skills and experience, including executive leadership and accounting and finance. The idea is to have a mix of people who can all bring something to the table. The report notes that Tenet has been actively refreshing its board, adding several new independent directors recently. That's important because it helps to keep things fresh and prevent groupthink. Tenet highlights its corporate governance practices, like having an independent lead director, limiting how many boards a director can sit on, overboarding limits for directors, and making sure the directors are evaluated regularly. Now, let's talk about how much these directors are paid. In 2024, each independent director got a cash retainer of $125,000 plus $200,000 in stock. Committee chairs get even more, so that's the financial incentive to oversee the company. Looking at the numbers, it appears the lead director J. Robert Carey did the best with over $500K in total compensation. It includes meeting fees in addition to his cash and stock payments. Moving on to the top executives, the report lists them out. Of course, the big name here is Som Sutaria, the chairman and CEO, but we have other execs too. They mention Lisa Fu, who's in charge of commercial operations, Thomas Arnst, who is in charge of administration and legal in Sun Park, who is the CFO. How much stock do the bigwigs own? Sutaria owns a decent chunk, and the other executives all have some skin in the game too. In theory, this aligns their interests with the shareholders. Alright, let's get to the real juicy part, executive compensation. The Compensation Discussion and Analysis, or CDNA, explains how Tenet pays its top executives and why. This is where we see if the pay is really tied to performance or if it's just a participation award. The CDNA boasts about a few things in 2024. They highlight operational excellence, revenue growth, and a diversified portfolio. We also learned they were transforming the business during the year with new investments at USPI and by selling of a bunch of hospitals. What I like the most is how they also talk about the importance of workforce development, new cost efficiencies, and improved clinical quality and patient safety in their operating model. Digging into pay, it looks like Tenet executives can make a lot of money if the company hits its targets. In 2024, the annual bonuses pay out at 200% of the target. The company incentivizes their key people for a multi-year stretch with performance and time-based grants, and those have an even bigger impact on the exec's pay. To make sure everything is fair, Tenet uses an independent consultant to check on their executive compensation program, and it is the board's Human Resources Committee, HR, that actually decides the compensation. It seems like a pretty big and active committee and includes, among others, Richard W. Fisher, Christopher S. Lynch, and Richard J. Mark. The base salaries for the top people at Tenet look like this. Sutaria at $1.5 million, Park at $700,000, Arnst and Fu at $650,000, and Arba at $550,000. So a good part of the executive compensation is decided based on the earnings before some items referred to as adjusted EBITDA. This means how profitable the company is, and adjusted FCF, which is all that jazz, minus how much interest they need to pay on its debt. Now it is a part where we as shareholders can make a suggestion. The shareholder proposal here is requesting a report on the strategies and programs for improving maternal health outcomes. But the board is against it. They say they already have these strategies in place and this is too much information to give out to the public that could break patient confidentiality. This filing gives some nuts and bolts about how to submit a proposal, where to ask for an annual report, and how some statements might be forward-looking. Finally, the appendix. It's just definitions for some of the financial jargon that they throw around. Adjusted EBITDA, adjusted free cash flow, and so on. It's there for the really detail-oriented investors or for anyone who wants to make sure they're not being hoodwinked by management. So what does this all mean? Tenet Healthcare seems to be positioning itself for continued growth, focusing on high-margin services and managing costs. The executive compensation plan is designed to reward executives for achieving these goals. I think their success boils down to how well they can execute on their strategy, especially in a changing healthcare landscape. I also worry about their ability to hire and retain good talent with ever-rising salaries and an always more demanding workplace. They need to do it while providing quality care, so there are a lot of conflicting interests. Thanks for watching. If you found this video helpful, don't forget to like, subscribe, and leave a comment below. Let me know which company you'd like me to decode next.